In today's video, I wanted to do a trading 212 portfolio update because I want to stick to my word like a Pritt stick and update you with all of my monthly movements on my trading 212 portfolio. But first, let me grab a coffee and then I'll be right back with you. Cheers. Anyway, welcome back to my channel. My name is Euan, and on this channel we talk about personal finance and investing in the stock market. So if that's something that tickles your fancy, then hit that like button and hit that subscribe button too, because why not? This video was originally planned to be released on Thursday, but I've decided to do something slightly different on Thursday, and I actually need your help with, but we'll get to that later. Just make sure you're following me on Instagram because that's where the action will happen, and obviously a bit later I'll talk about it a bit more too. And please remember, I'm not a financial advisor, I'm just a random dude on the internet in a tie-dye t-shirt with a donut on it, so please do your own research before investing your capital. So let's jump into the app and start with my free shares. This baffles me that I'm getting a fair few, and last month we were at just over 1,000 and this month we are just under 2,000. The reason it actually says the portfolio is zero because I keep selling all of my shares. That's because I want to use it towards my runaway bride fund or leave my job fund. Don't tell my boss. If I left it invested, then what potentially could happen is that they lose 30% because there's a massive crash. Who knows what's going to happen with a beer thingy, so I just wanted to make sure that I've got that cash in hand, just in case I do need it. So this is a reminder to everyone, please do not invest money that you need within the next 5 to 10 years. And if you're anything like me, then it should be even further than 5 to 10 years. You shouldn't even have to worry about it. This money that I'm putting in today is going to be used down the line when it's compounded into a lot more money. So the highlights for the free shares for this month were actually a few AstraZeneca shares. So I got two AstraZeneca shares, and then I got 3 Unilever shares, which had a combined total of £300. And if you look down here, you can see National Grid, AstraZeneca, Royal Dutch Shell, AstraZeneca again. So the majority of them are Under Armour and National Grid. So I just need to thank everyone again, because if it continues at this rate, I should make £1,000 in free shares in October. So fingers crossed. And if you haven't signed up, of course, the link is in the description. So now for the juicy bits, my trading 212 portfolio update. And I can confirm we are just under 18%. So 17.94% in the green. We're in the green again. However, we do have some biggest losers in my portfolio this month, and the winner of the biggest loser on Euan Copeland's portfolio is Wells Fargo. They are down a lovely 20.67%, £157. Just not ideal, and it's not looking great. This is likely to be because of the PPP scandal and the fact that they're not reaching their earnings estimates. And of course, Wasabi, aka Warren Buffett, has sold a lot of his shares, which is one of his staples for a long time. So what does that tell you? Who knows? So I'm not going to sell all of my Wells Fargo shares. I'm just going to rebalance my millionaire pie and remove them from that. This only equates to 2% of that pie and 3 shares overall, so it's not a massive amount. And that money will be reinvested back into that pie. So it's just a bit of a rebalance. I've never done a rebalance before, but I'm going to go through it now with you and explain a few things. So as you can see, I removed Wells Fargo and it now says 0%. So it's going to be removed from my pie, and I'm going to rebalance. So this will basically mean that we're going to sell the shares in Vusa, the ETF, Wells Fargo, Apple, FTSE 100 and Coca-Cola, and buy more shares in Tesla, eCar, Netflix, S&P 500 UK Dividend, SSE, Amazon and Walt Disney. The reason there's so much going on is because I've never rebalanced before. So there was some, if we go back here, you can see that they're not actually at the right percentage as I wanted them. So it's just going to put them to the right percentages and allocate how I wanted them to be allocated. So the only change is I've removed the Wells Fargo and I've added 2% of the Tesla because I'm a fanboy now. It's got to be done, you know. It's mainly because I watched Ali Abdaal's video on his half-price Tesla, which he managed to write off as a business expense. So that just got me a bit more intrigued into Tesla. And it turns out that the government are pushing and giving tax reliefs on electric cars in the UK. And that video just made me want a car even more. So we're going to rebalance. And as you can see, we're going to sell all those and buy some of those as well. And we confirm the rebalancing. So that's going to sell a few. And because both markets are open now, it's going to sell a few and buy a few So it's going at 16% at the moment, and by the time this video is finished filming, it'll probably be 100%. And I've also actually received £5 in dividends, or £4.26 in new dividends, that will be reinvested this time as well. So as long as there's no dodgy companies that come out of the woodwork and are in my pie, then I should be okay. And I don't plan on adding any in the near future. I may change my dividend pie around a little bit, or my Felicia pie. So obviously I don't want to get in the habit of buying and selling and rebalancing, so I'm not going to be doing that. I'm just going to let it sit and we'll see where it takes us from there. Anyway, the loser of Euan's Trading 212 biggest loser competition is actually Apple, and they are up 58% or 57.84%, which is mad. I wish I just invested more back in March, but you live and you learn. Hindsight is a wonderful thing. And sometimes I have to remind myself that I'm in it for the long term, and what happened 6 months ago is in the past, can't change it. We're looking for the future, and we're gonna, over a long period of time, we're gonna be fine. And that is my reminder to you as well, because that's what I'm here for, to remind you that long-term thinking, long-term planning is the way forward. I haven't actually added anything to my portfolio this month. Maybe the e-car thing wasn't there before. I'll have to go check the video again. Or you could actually, yeah, why don't you do that? Why don't you go watch my last video and then come back to this video and comment, the e-car was not there. So both my pies are in green, which is very good. My millionaire pie is ahead, and it always seems to be ahead. And that's because I think Apple is just doing mad things. So the percentage gain is a lot more than they expected. So I'm happy with that, can't complain. And the Pie Felicia one is behind, and I think it will stay like that because I'm not sure that it counts the dividends, which is a bit annoying. Because the majority of dividend paying companies earn their total return and their compound interest, blah, 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 from their dividends. So it might be a bit of a flaw in the system that they are underestimating their performance, but it doesn't really matter because long term again, it doesn't really matter that it's only 1% up. If you don't know, then currently I'm investing £150 into my millionaire pie a month and just £50 into my Pie Felicia pie, which is not loads, but as I said earlier, I'm stacking cash for my runaway bride situation. That's essentially an investment in myself and this YouTube channel. So if you want to make an investment into this channel, then as the Messiah says, smash that like button for the YouTube algorithm. And if you don't know who that is, that's Graham Stephan, by the way. Speaking of the man himself, briefly I mentioned earlier that I'm making a video on Thursday, which is going to be a self-made CNBC millennial money. So what I've done and what I'm doing is I've got my missus to interview me, I've made loads of B-roll shots, and I'm trying to get loads of graphics to make this video really, really good and basically do something identical to what CNBC millennial money do, because Graham Stephan often reacts to these type of videos. So basically I need your help to get my foot in the door, because hopefully if I make this good enough, if I make it intriguing enough, that Graham Stephan will react to it, and who knows what may happen if that does happen. So please do not do this right now, because I need it to be perfectly timed in order for this to work, but hopefully it will with your help. But what I need you to do is when I give you the go ahead on Thursday over on my Instagram, I need you to tag Graham Stephan at Graham Stephan on my post, on my Instagram post, and tag him in my story, in the stories, blah, 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 on TikTok, on Twitter, on MySpace, on Bebo, on anything that he socializes on. All I'm trying to do is get him to watch it, and then the ball is in his court to whether he wants to react to it and make a video on it. So when I say go, can I count on you? Please? Anyway, back to the video. So my portfolio is around 17.5%. It's changed in the 20 minutes that I've been making this video. But anyway. So we have lots of green, which is very good. We have a tiny bit of red. It's actually changed a little bit because I've rebalanced. The main movers are obviously the Apple, as I said earlier, the VUSA ETF, which is at 27% or just under 27%, which is awesome. And then we've got Walt Disney, which is up at 16%. And in not so good news, Disney is supposedly removing their dividend because they potentially might be reinvesting that money into the streaming services. So although that's not good news for dividend investors, I'm actually quite pleased with it because I like Disney as a company, and I think they can use that and compete with Netflix. So hopefully, although I've got both of them in my portfolio, hopefully Disney can do that. Some of their Disney originals are amazing, so you never know, fingers crossed. We might see some big growth from Disney. We've got some more red, and that is AT&T and also FTSE 100, and then the other ones are really, really tiny, so that doesn't matter too much. There have been rumours about AT&T selling their DirecTV part of their business at a loss to a different company, but I'm hoping that because they're investing a lot into 5G, that they can recover from this and their stock price will go up a little bit. But we will see, because I can't tell the future. If I could, I probably wouldn't be sat here. I'd be winning the lottery every single week. And the FTSE 100 is down 3.75% because of that beer thing going around and the other thing that is going around. I can't remember what it's called. Rhymes with Brexit. That's it. I'm joking, obviously. Can't forget about Brexit. That is shambolic. Anyway, that thing's happening, so that is obviously going to affect the UK market and the FTSE 100. So we will see what happens with that, because hopefully the market gets back to where we were and companies are making money, and who knows. As always, I'm really optimistic about my investing, and I'm just going to continue investing every single month and whenever I get a bit of spare change, and hopefully over the long term we will see that compound interest chart go, and hopefully you will be doing the same, and we'll all be laughing in our care homes with lots of money in our pockets. Obviously I do want to be investing more, but at the moment I'm reinvesting back into the channel and saving that cash up so that I can potentially leave my job and do this full time. So fingers crossed. And hopefully down the line I'll be able to max out my ISA and get that sweet compound interest down the line with lots of money and become a multi-millionaire. Not just a millionaire, a multi-millionaire. Anyway, that's it from me. Make sure you hit that subscribe button and that bell notification, because you do not want to miss the video on Thursday. I think it'll be a good one, and I'm hoping you will enjoy it, because it's a bit out of my comfort zone and it's a bit more production that I'm used to. I'm just used to sitting here talking sugar honey iced tea into the camera. So yeah, you don't want to miss it. Make sure you're there on Thursday. And I'm hoping you enjoyed this video and you got some value out of it. If you did, please hit that like button and comment something down below as well. Thanks for watching. I'm not a millionaire, but I'm trying to help you become one. So, peace. Who knows, but all I need is him. All I need him. All I need for him. All I need. Runaway bride, sort of. As I said last month as well.